Most likely, you're handing the IRS more money than you need to. Most business owners are paying the IRS more than they need because they don't have a tax strategist that's helping them pay the least amount that they possibly can. Most think that their tax preparer is helping them optimize their deductions, when in reality, that's just not the case. In today's video, we're going to go over how you can avoid overpaying taxes by finding the right professional to help you in 2025. I'm James Masotti, the owner of Our Team Accounting, and on this channel, I am passionate about helping entrepreneurs achieve their personal and professional goals through intentional financial planning. Let's dive right in. The first thing that we need to talk about is what exactly is a tax strategist and how is it different from a tax preparer? Well, as a tax preparer, they tend to be focused on just checking the boxes and filling out the forms that need to be filed for the IRS, the state, and the local tax returns. A tax strategist is really focused on the big picture of how do we optimize how much you are paying based on what your goals personally and professionally are. For example, if you're trying to go ahead and buy a house, you probably want to make sure that you're actually showing income and paying taxes because you need to show that you have income being generated in order to qualify for a mortgage. If you're trying to optimize for your retirement planning, then how you set up different retirement funds and contribute to them in the overall structure of your business may help you be able to benefit from that. So these are the things that a tax strategist is really going to look at, not only your specific business, but also what is on your timeline and your horizon over the next couple of years to make sure that decisions we make today don't hurt you a couple years down the road. So one of the things to think about when looking at hiring a tax strategist is, at the end of the day, who can be a tax strategist? So the interesting thing with tax strategists is that because in many instances, they're not actually filing tax returns, they're not required to follow all of the same rules that somebody who's actually filing taxes are. So a lot of times they are CPAs, EAs, tax attorneys, but they don't necessarily have to be. There are other ways that you can get training and knowledge on how to plan strategies for taxes. That being said, a CPA, certified professional accountant, is one form of professional that can do tax planning and tax strategy. Again, not all CPAs are really focused on being able to do that. So just because you have a CPA doesn't necessarily mean they're going to be doing tax planning and tax strategy. Similarly, there's an enrolled agent, which is somebody who has registered with the federal government to be able to file taxes. And so they tend to have very strong familiarity with the IRS tax code. That said, they oftentimes are not really focused on doing things like accounting and stuff like that. So when it comes to the tax planning and tax strategy side of things, they're really going to be focused on this is what things need to look like. And they're probably going to have to really partner with somebody else on how do we ultimately get there to achieve what we're looking to achieve. A tax attorney is somebody that most small business owners probably are not going to need to leverage. You're really going to start leveraging a tax attorney for your tax planning and prep if your transactions get really complicated. If you're dealing with international mergers and acquisitions, if you're dealing with large complex supply chains like pharmaceuticals or large scale manufacturing, where depending on what's being made where can change how much you have to pay in taxes based on tariff codes and things along those lines. And so there's a lot of stuff that for the most part, you're probably overpaying if you're getting a tax attorney involved in your overall tax planning and tax strategy. But it is important to know that they can get involved, they can help. And there may be folks that have a tax background that actually are providing that service because they prefer it over practicing law. So the next thing to think about when we're thinking about having somebody that's going to help us with our tax strategies is whether you want a generalist or a specialist. The IRS tax code is over 1,600 pages long. And so being able to really discern what is most relevant to your particular situation is oftentimes hard for a generalist. That said, there is a time and a place for a generalist. Again, if you're just starting out in this field of tax planning and tax strategy, maybe your situation's not too complex yet, and that's what you can afford, it may still be beneficial to hire somebody. But as you get into more complex things, let's say you're a real estate investor and you're trying to figure out if a cost segregation study is important for you, that probably doesn't matter to you if you're in a manufacturing business. Whereas understanding whether you should do a Section 179 deduction would probably be relevant and how to apply that in your business if that applied to you on the manufacturing side. So familiarity and understanding of things like these, which are pretty standard and common things in those two fields. But there's a lot more nuance of things like R&D tax credits and other stuff like that, that being able to know and understand how the IRS has interpreted and ruled on different people taking advantage of different sections is going to matter. Most tax strategists are probably going to be able to help you figure out how to optimize for your retirement or how to pay your children to maybe, again, improve your write-off basis and things along those lines. So that's where you can probably get away with generalist kind of stuff, but there are areas where having somebody who either has some specialized knowledge or familiarity with your industry may benefit you as you start getting larger and more complex situations. Next, let's go ahead and talk about communication and availability. Because not all tax planning and tax strategists focus on also doing tax preparation and tax filing, they tend to have a lot more flexibility throughout the year to do engagements. That being said, the best time to actually make your tax plans is well ahead of your tax deadlines. So what you don't want to do is call up your tax planning tax strategist on January 1st and say, hey, how do we make sure I minimize my taxes for the year? There might be some things that they can help you with, but there's a pretty good chance that it's too late. You need to start several months in advance to make sure you've got all the right pieces of the puzzle in place. But it's also important to know if they do tax filings that they're going to be busy during certain parts of the year. And so they're probably going to be focused on doing a lot of their strategy conversations in the middle of the year. So after filing deadlines, so starting in more like May, June, July, when maybe you're thinking about vacation, that's when they start thinking about how do we start planning and doing prep work for 2025 or 2026 taxes, because that's when they have downtime before they then have to file extensions in September or October. Now that we've talked about communication, it's hard to not talk about technology as a piece of that as well. In today's day and age, there's planning softwares out there that can really help tax strategists really think about asking the right questions, trying to uncover what is available. And these technology platforms have really tried to make those 1,600 pages very searchable for tax strategists who are able to kind of put in kind of some of the right questions, be able to then dig into the supporting documentation and rulings on things, and really build out a puzzle of how do all these different pieces interact if we take advantage of this instead of that. And they have built-in calculators that can really help them optimize what a strategy would look like depending on different outcomes, and helps them really scenario plan so that you don't have unintended consequences. So not that you need to know what all these different software platforms realistically are, but definitely having a conversation with your tax planning and tax strategist to see if they're taking advantage of any of those things and how they're scenario planning might be a valuable part of your conversation. So what are some warning signs that you should really be looking out for when hiring a tax planning or tax strategist? I would say first and foremost, I am very wary of tax strategists who will tell you to spend more money on things that you really don't need in order to reduce the amount of tax liability that you have. I'm a profit first professional. I'm a big advocate for having a profitable business because that's how you support your family, your goals, your livelihood, and spending money on things that you don't need is not a great way to go about doing that. That being said, if you legitimately need a particular piece of equipment, or you need to hire a person, or any number of other scenarios, then you should absolutely be having those conversations in terms of like, here's what I think is going to happen over the next couple of years so that you plan accordingly and maximize the right way to execute those transactions. But don't spend money you don't need to just so that you can pay the government less money. It also means you're paying yourself less money. Another thing to be on the lookout for is people who are just using cookie cutter templates and saying like, oh, well, this is how we set up everybody to maintain. There are certain things that everybody should be trying to take advantage of. It's just, again, to what degree, depending on your other goals. Yes, retirement plans are great and fantastic, but there may be other goals that you have more near term that you're willing to sacrifice because, let's say, for example, you're like me and you've got a bunch of real estate holdings. I want to take advantage of free taxable savings if I can, but I also have some other goals that I'm prioritizing beyond maxing that out because I also know I have real estate that is going to generate passive income for me when I get to retirement age. So understanding how those different pieces can really kind of play against each other is going to be important for you. And watch out if they really try to push you into a one-size-fits-all model. We just talked about communication. And so a lack of transparency or communication is an obvious one to really be on the lookout for. When they may not share with you all of their tips and tricks and things that they're doing, because tax planning and tax strategy is kind of one of those things. Once you let the cat out of the bag, it's really hard to let it back in. And so expect that you're probably going to have to pay before they really unlock all of their secrets and tell you hey, here's all the things that we're going to do. Here's why we're going to do them. But you should make sure as a part of the conversation that you understand they're going to provide you that information and that transparency as you're going through things. Also, are they going to communicate with you throughout the year or with your accounting professionals? Again, you're going to be busy running your business. You may not be paying attention or be aware that certain events that happen, intended or unintended in your business, may have an effect on your strategy that you outlined at the beginning of the year or even prior to that with your tax strategist. So being able to know that they're going to be responsive and communicative in the event that things need to change as you go throughout the year is going to be important as well. Now that we've gone through those, let's talk about what you're going to pay versus the value you're going to get for your tax plan or your tax strategy. Oftentimes, tax strategies are not inexpensive to get. The important thing to realize is that when you implement a tax strategy, often those benefits are going to follow you for years to come. So when somebody saves you $5,000 or $10,000 on your taxes, unless they're taking advantage of a specific tax credit or something along those lines for a particular year, it's very possible that that's actually going to save you money for all of the years that you are in business. So when you get a price quote from somebody, it's very possible that they're going to charge you a fixed sum amount for the engagement, rather than an hourly rate or something along those lines. And when they do that, it's probably going to be into the thousands of dollars. And so it's important to have first an exploratory conversation to talk about your situation for them to be able to give you the perspective and guidance in terms of whether it's even worth it for you to be able to pay them for their services if they think there's going to be enough opportunity to find savings to generate a positive ROI. If they go forward with the engagement, then more than likely, there's a pretty good chance, especially if this is somebody that's come referred to you, that they're going to be able to provide a ROI on their benefit. Some folks, in really order to alleviate any concerns or stress that people have around this, will even provide an ROI guarantee on the dollars that you will spend with them. So now that we've gone through and we've talked about how you're going to find your tax strategist and what working with them is going to look like, you really are going to need somebody to really oversee this big beast of a thing that you've built. You've got this awesome company, you've got employees that you're paying, you've got tax strategies in place that you need to run, and all the while you're still having to run your business. It's time for you to get a fractional CFO. So in this video right over here, we're going to go ahead and talk about what you need to look for when you get one of those. I'll see you there.